Hi, this is Brant Spessart, and I just want to say thank you so much for tuning in for our 2025 first quarter economic review. Here at Steward Wealth Strategies, we believe that knowledge is power. When we're trying to make financial decisions, we want to make sure we make wise financial decisions because here at Steward Wealth, Steward is part of our name, and we believe in stewardship. And an educated client is our best client because you're able to make wise decisions that are in your best interest. And we want to make sure that we're operating based on fact and data and not just how we feel. So, with financial planning, it's always good to remember that there are six key areas. A lot of us think about investing as a primary area of financial planning because that's what flashes across the news screens on a regular basis, talking about the stock market investments. But retirement planning is a key and essential area of financial planning. Investment planning is part of a financial plan, along with tax planning, protection planning, estate planning, but then also, we are blessed to be a blessing, and generosity is a key component of financial planning. But all these areas, anytime we make a decision or take action or set a strategy in one area of financial planning, it probably affects the other areas some as well. We want to make sure we take a holistic approach. Now, first quarter 2025, the market saw a lot of volatility. We just came off a strong 2023, a strong 2024. We hit some all-time highs in February, and then all of a sudden we had some extreme volatility. We ended the quarters down for both the S&P 500 as well as the Dow Jones. Now, something else that's coming down, but it's a good thing, is inflation. We reported earlier in the year that inflation was lower in January and February. And in fact, as you can see by this chart, in February, core inflation was down to about 3.1%. That's overall inflation, less food and energy. Core inflation is the one that the Fed primarily monitors. But actually, even more up to date is the March numbers. And the good news is core inflation is actually below 3% right now. The Fed's target for inflation, just so you can remember this, is 2%. So the Fed is continuing to monitor inflation with a target of 2%. Remember, just a couple of years ago, we had skyrocketing inflation, and the Fed stepped in and raised interest rates at the fastest pace that it had in over 4 decades to fight inflation, and it's done that. Inflation has slowed down significantly. Remember, when inflation is down, it doesn't mean the cost of goods and services are less, it just means they're going up at a slower pace. Now, I just mentioned interest rates. We do have higher interest rates than what we saw over the past few years, but interest rates did go down a little bit last year. The Fed is actually scheduled to meet, well, as the day of this recorded, I'll say over the next couple days, but they'll probably have already met by the time you watch this. But right now, the Fed funds target rate is in the low to mid fours. Now, that's good when rates go down for borrowers, but for those of you that are seeking safety with more conservative type investments, just kind of know that, hey, look, if you're looking at the treasuries, long-term treasury yields right now are in the 4.5% range. If we go back about a year ago, they were a little bit less. But what's interesting though is the treasury yield actually is a little bit more in line where longer term treasuries are paying slightly higher rates than short-term treasuries. You just have to know that there is a cost to safety. If somebody is really conservative and going after very safe investments that aren't going to have a lot of volatility, well, they may be safe in the short run when it comes to volatility, but long term, they're still going to pay lower yields than what equity should pay over somebody's lifetime. Now, what we've seen so far this year is the new administration, and the new administration has come out quick and swift and has enacted a lot of change. The one thing that everybody is talking about more than anything so far this quarter has been tariffs. What is a tariff? A tariff is a tax imposed on goods imported or exported between two countries. Tariffs are a type of trade barrier, and the talk is to try to balance out trade. And try to make it a little bit more of an even playing field. But, the talk and the implementation of some tariffs have definitely caused a lot of volatility. It's created a lot of unknowns as far as what's going to happen for, a lot of U.S. companies that export as well as import. And so American consumers may be changing who they're buying from. There may be different labels or different brands or different countries of origin for some of the products that you may be using. But you just have to know that tariffs are a tax, and a lot of times those taxes may cause prices of goods and services to increase. So we may see stuff, may see some side effects of this as a consumer. But the one thing we do need to know is tariffs aren't brand new. In fact, we've been dealing with tariffs ever since the Boston Tea Party. But with the tariffs, there is constant change. We have seen just almost on a weekly basis since President Trump announced the tariffs that there are policies being put into place, but then it has backed off a couple times on some of the trade tariffs. But we do want to just kind of keep you up to date as far as what's going on. We don't want to react to the headlines because that's where a lot of the volatility is coming from. But are there any measures that are going to affect you long term? Now, we do have to remember, though, that we need to control what we can control. And, there's a lot of headlines out there that get our attention and cause us to react. We can control our budget. We can control our spending, our savings, our debt management, our having an emergency fund. We can't control what headlines are out there that are trying to get our attention. So we highly recommend be careful. Media magnification can really get our attention. Fear and greed are the most dominant human emotions. Try to minimize some of your exposure to this stuff as much as possible because the one thing we know with the stock market is investing is long term. And even if we go back over the past 4 decades and look at the past 40 years, there's been a ton of volatility. We had super high interest rates in the 80s. Things calmed down in the 90s, but then all of a sudden we had the tech bubble and boom. But then that bubble burst in 2000. Then we were followed up by 9/11. Then we had the Great Recession from '07 to '09. Then other headlines of Brexit, sovereign debt crisis, government shutdowns, global pandemic, Republicans in office, Democrats in office, high interest rates, low interest rates. We've had all this over the past 4 decades. And guess what? For folks that have been investing long term, not trying to time the market, but stay in the market, have actually done really well. But it can cause some anxiousness along the way. We can't control the market, but here at Steward Wealth, what we can control is our advice. We are here for you because we know investing can be difficult sometimes. We want to help you focus on what your long-term objectives are and your goals and help you avoid making knee-jerk reactions based on headlines. So here's our takeaways. The S&P 500 did enter correction territory in first quarter. Tariffs have had a significant impact on the equity markets, and a lot of it really has to do with more uncertainty than anything. Fed's funds rate, as of this recording, has remained unchanged, although by the time you watch this, there could be something different. Inflation has continued to improve, and we'll monitor and keep you up to date with those inflation numbers depending on how the tariffs affect that. But right now, inflation's a lot better spot than where it was a couple of years ago. We are really close to target inflation of around 2%. Bonds are more or less volatile investments, but you just have to remember that cost of safety means a lower rate of return, and that will affect a portfolio over the long run. And focus on what you can control. Limit the amount of exposure you're having to inflammatory news. Just know that media's goal is to get you to watch, click, listen, or read. And just be careful because it's usually negative headlines that get our attention, especially when it comes to money. Market declines. I know we don't like them, but they are part of the investment experience. Investment returns are never linear. Investments are always up and down. To be up double digits last year and then be down a little percent, a little bit so far, first quarter of 2025, maybe the headlines aren't normal, but That's part of investing right there. And I know it's difficult. I know some of you watching this are probably thinking, yeah, but this time is different. Those are dangerous words right there for investors. Focus on the long term. Stick with your investments. Peter Lynch, one of the greatest investors of the 20th century, really brought fidelity to the map when he managed the Magellan Fund. Peter Lynch stated that more money was lost trying to avoid corrections than what was actually lost in corrections to begin with. Warren Buffett consistently reminds investors, be long-term focused. Write out the ups and downs. We all know the saying, buy low, sell high, but human emotion causes us to do the exact opposite. Human emotion, greed and fear. Greed will cause people to buy high, and then the fear will cause them to sell low. That's the exact opposite of what we know we should do. So maintain that long-term approach. Maintain that emergency fund. Continue to live within your means and take advantage of opportunities, because it is a true statement that the market is volatile and will go up and down on a regular basis. But it's also true that every person's lifetime that's watching this webinar has seen the market grow. So if we know it's going to be volatile and we know it's going to go up long term, consider opportunity during chaos. There can be some great entry points for investing new dollars or possibly Roth conversions when the market is down. Just keep this in mind though, we are here for you. At Steward Wealth, we don't take our relationships with our clients lightly. We've got an entire team of wealth managers and client service associates here that are here to serve you, that are here to be that calm during the storm. So if you have questions or concerns, or just want to talk about your situation, even if it's not a formal review and you just want a 5-minute phone call, reach out to us. We're here for you. And if you have friends or family members, maybe you're fine, but you know other people that are struggling, please reach out to us. We would love to help people that you care about. Our best clients come from our best clients. So we would love to take care of folks and help them make wise financial decisions. But I just want to say thank you so much for tuning in. I try to keep this brief. And just know that our team is here for you. Reach out to us if you have any questions. This is also the time of year where everybody's wrapped up or wrapping up their 2024 taxes. Please make sure your wealth manager or your client service associate knows that you've finished your taxes. We'd love to get a copy so we can analyze that at our next review. But I just want to say thank you so much for the opportunity to serve you. We truly appreciate you. God bless you, and have a great 2025 and start to summer.